Have Pankaj Murarka to talk about the fundamentals. Kunal Naresh on the charts as always. Gentlemen, hi, afternoon. Kunal, firstly to you, because it started off looking okay. We were almost, around that 17,200 print intraday, and then now again beginning to cool it off.
Good afternoon, Aisha. So, I think my sense was that the indices were, going to be a bit more range bound today, and I think we've managed to just about trade in a 100 point, 150 point band for the Bank Nifty so far. A 50-point band plus or minus at 17,100 mark throughout the day. So it doesn't come as a surprise that the action is limited towards the stock specific. And I think today's majority of the price action, at least in terms of the open interest, what I can see is majorly on the bent of the open interest trends, and that is because of the weekly expiry. So no major trends emerging for the Bank Nifty, but it's just that we've not corrected as sharply as compared to the handover from the US markets. That's the only positives which you can take away from the closing today.
Okay, Naresh, what about you? What are you making of the texture of the market at the moment? A sudden slip and 17,200 seems to be a tough resistance area for us now.
Yeah, so we continue to stick into that range. Say 16,800 has held on the lower end. 17,200 is where the pivot point is. If we start closing above it, it opens up a move towards 17,600. The event is out of the way. There's a little bit of a jitter, but the main index which I look out for is suggesting a risk on move is the dollar index. That broke yesterday's low also today. It is getting back to that 101, 102 zone, which was the recent lows. If that breaks off, we get a risk on environment across the globe. So overall, playing for a bullish move over the next 2-3 weeks would keep a stop loss at 16,800 and continue to be long.
Pankaj, hi, afternoon. What do you do in this kind of a ranged market? Is it time to buy? Is the worst behind us? You obviously can't time it to the T, but are the valuations looking comfortable?
Hi, Aisha. What you should be doing and everyone should be doing in Indian equity markets at all points of time is just keep buying good quality companies and never sell them ever. Coming to on a more near-term point of view, I think valuations are actually moderated now because after this correction, if you look at Indian valuations, we are at about 17 times 1 year forward earnings. This is actually pretty much in line with last 15-year averages where Indian markets have traded. So I think given that the mayhem that is played out globally and some nervousness around this bank failures in US and stuff like that, obviously valuations in India, I think, have become very reasonable or attractive for a longer term investor. So I think, and the fact that markets are around these levels, I would like to think about it is this is a healthy consolidation that's playing out in the market. And this is really a good time to invest for investors taking a slightly more medium term to longer term view.
So that's the advice at this point of time on the equity markets. But specifically, Pankaj, I also wanted your take regarding the IT stocks because they continue to reel under pressure. There was a bit of a hint of a recovery at the start of the year, but that too has fizzled out. And now with the BFSI sector coming under pressure, plus the expectations from Accenture being a tad bit muted, how do you think one should play the IT stocks? Buy for long term or at least wait it out? There'll be better levels coming?
I think if you look at the sector underperformed over the last 18 months, and during that period, earnings have grown, which effectively means valuations in the sector across the board are moderated by 20 to 30% than where they were 18 months back. I think valuations have become far more reasonable. There are short-term concerns on growth outlook given some of these bank failures in US. But the fact is that these smaller banks, regional banks, are a very small proportion of business for Indian IT companies. So unless you make out a case that US goes into a very deep recession and global economy goes to a complete very deep recession and a big crisis, which is not my or even the consensus based case, I don't think so. There's a meaningful impact on IT companies and they'll still deliver growth. Short-term quarterly volatilities in terms of growth might still happen, but the fact remains that globally, if you talk to the top 500 companies, one thing which is very strategic now on the CEO's agenda of all the Fortune 500 companies is to digitize their business, which effectively means more digital spending. I think it's a good time to accumulate these IT stocks, probably over the next few months, and take a 2 to 3 year view. And I think investors with medium-term time horizon can really make healthy returns out of the sector because the growth outlook for the sector remains very much intact.
We can't let you stop at that. You've got to give us the top 3 pecking order as well.
Well, meaning I would say investors should begin with large caps. Within large caps, obviously we have ownership across uh, Infosys and HCL Tech because both of them are delivering the highest growth within the industry. And we also have ownership in Tech Mahindra now because there we see a delta change in terms of a new CEO coming in. And in IT companies, we've essentially seen that when you have a CEO change and if the incumbent or the incoming CEO has a great track record, he can really drive very strong growth. So Tech Mahindra as such has been underperforming industry growth for the last few years, but we think they have a very credible guy coming in as a CEO probably sometime in July, and he can really drive a lot of changes in Tech Mahindra by virtue of which we would expect that their growth potentially could be much higher over the medium term versus what historically it has been. So I think to begin with, investors should start with large cap IT names and probably some point of time during the middle of the year, once we get a better clarity on outlook for US growth, probably enable into some mid-cap ITs as well.
So that's a take coming in on the top IT bets as well as how you should play the large cap names. But let's also look at some of the other counters which are buzzing in the trading session. It's Spark, which is up around 11%, Sun Pharma Advanced Research Company, which is up 11%. GR Infra Projects has been bagging a lot of orders today as well. There was an announcement of 13 crore order. So that stock too is holding up with a gain of around 7%. So let's watch out for that also. And in fact, on price volume action, let's look at some of the other names as well, which are buzzing on account of that, because there are a whole host of names like Berger Paints as well, which has snapped the 6-week streak of forming higher lows. There has been a breakdown from the 5-session consolidation and it slipped below the 100-day moving average. Remember, today there was a note from on Asian Paints as well, wherein they talked about that how every rally should be used as a selling opportunity, and that's perhaps having a rub-off impact. Page Industries too has formed a bearish belt hold candlestick pattern, snapped 6-session streak of forming higher lows, and the trend is reversing from the 50-day moving average as well. Kunal, your take, Berger Paints, Asian Paints, the other paint companies, would you like to make a trade there?
So I think the trade would be on the upside, but I'll still wait for maybe a day of confirmation of a breakout back again, because Asian Paints, for example, the stock which showed good recovery, I think in the last couple of trading sessions, tried to come back towards 2,850 or 880 odd mark, which was just marginally below the 200 moving average for Asian Paints. But today the stock has seen a corrective phase back again. So I'll wait out for a confirmation that when Asian Paints breaks past about the 2850, 2880 mark, that could be a zone where would look to buy. Same would be the case with Berger Paints. I think that stock made a high of 605 or 610 last week or so. So I think that would remain to a breakout point. So only on the breakout of these two levels is where I would believe that a trade could be initiated into this stock.
Right, okay, let's get some closing ideas as well. Naresh, on your list?
So being a little defensive, going into NTPC, which has corrected a bit in the last few days from 180 levels to 174, looks like a place where it should bounce back from, back to 180 out in this one.
Right. Kunal, what about your strategies?
So that will be ITC. That stock has been looking very attractive. In fact, just last couple of trading sessions back at 370 levels, initiated a buy in ITC. Still remains to be a buy at 380 plus levels.
It's a closing trade coming in from Kunal as well. What other things are buzzing around? So Vedanta is definitely something which is down 4%. Pankaj, do you see any kind of sense in that report which suggests that the promoter might be looking at selling some stake to pare down the debt? Do you think any possibility of that happening? Would it be a prudent strategy just to cut down the debt?
Well, Manisha, honestly speaking, I don't have a view. We don't look at this company very closely, and generally we tend to avoid commodity companies because of high volatility in commodity prices. And this is one name in which I have personally not invested for a very long time. So I don't have a view there exactly in terms of how this plays out. But I think companies where leverage are high will have to, given the concerns around leverage with some of these Indian companies and many companies globally, will have to take appropriate actions to moderate or manage their leverage.